Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, January the 14th, 2025. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Still testing this 618 retracement level up here from the prior high to the low. And we just kind of grinding and testing it. Is it over and we're ready to start turning over, or we're going to pop and go higher? Time will tell, but this is going to be a tough nut to crack. At what point do we say we're likely going to go in and make new highs? If we can get above this 112 up here, then if we can break that level, which happens to be the high to low 786 level, right around that upper 111, 112. So if we do that, then it's more likely we will go and make new highs, but that's a big if. We can do that. Jumping into the charting platform, we can see the latest little pullback. We did go on and reach these extensions. It's like rinse and repeat, rinse and repeat, rinse and repeat. So we knew way back from this high to low when we took out that 618, we're likely going to go up to this 107, 107.78 level. We reached it. Then we got another pullback. We reached the extensions. We got another pullback. We reached the extension. So is this one it, or do we go a little bit more? Well, from the bigger picture is what I was talking about. From the weekly perspective, we can see this 109 level is what we're testing. And that's the 618 off the prior all-time high. Well, not all-time high, but most recent high to the recent low. So we've been testing that 109-ish level, and we're still kind of testing it. Up here is close to that 112, 111.70, 112. So if we get this to pop and close above 112, then there's a good chance we're going to go up here to about 117. Okay. But I've been saying it for 2 years that I thought this was the top in reversal. I still think this is the top in reversal, and I think this will fizzle manizzle. Maybe we just chop and grind for a little bit more before we turn over. But either way, what if, William Bruce, we actually go up, we take out 112, then I would say highest probability we're going to make a new high and start pushing toward 117. Well, remember from the bigger picture, and that is over here, that what if we actually do go on and break a new high? Then we're not going very far, right? We kind of talked about this topping out at 115, 120, and the next level in there would be about 117. So I don't want you to think because this is grinding higher, it's a done deal. By no stretch is this a done deal. But all I could say is, what if it does? And we do break this 114, then this wave one can't end here if we go one tick above 114.72, at least on this platform. And what if it does? Then we're likely going to 117, maybe 119, start pushing closer to that 120. But even if it does, all it's doing, Randy, is shifting gears. We're going to move this guy to over there, and we're still going to end up coming back down here. So I don't think this is out of the question. Even if we do go higher, we're still going to get the inevitable move lower. But don't count your chickens before they hatch, thinking, well, because of this, it's definitely just going to go breaking out. It's a done deal. No, this is still a high, low 618 retracement at the moment, and that sets up much more downside. Amen? So we shall see, but be careful, because as you drill down, we not only got the latest pullback, we reached the extensions again. Eventually, you're going to peter out. And after all these, we reach the extension, we get a pullback, we reach the extension, we get a pullback, we reach the extension. All we've done in the bigger picture is go toward that 618 retracement. And that is typical. And where are we likely to hold? Somewhere between the 618 and that 786 up here. Now, if we do go breaking that area, that's why I'm kind of rounding it off to about 112. We get a daily candle, weekly candle, etc., body of that candle above 112, then yes, focus will go on. We should make a new high going toward 117. Okay? But up and until then, I would not be surprised to see this hammer up in here for a bit before getting rejected. So that's the plan still. And if we do go higher, hey, we know what to do. We start breaking 112, then we focus on 117. Amen? What about the euro? Is this the bottom of the euro? Well, if the dollar is finished grinding higher, then the euro should have finished grinding lower. Notice how from the previous move, we went right toward the extensions. We just missed by a couple of ticks this 1618 extension, but I'm still looking for a higher low, higher high so far. Amen. So this could be the end. Maybe the dollar fizzles out, starts turning down, and the euro starts bottoming. But when do we get excited about it? Well, first, we need to start looking at the prior high to low. We eventually need to start breaking out above that 618 retracement. So I'm going to take a couple of these off because we have so many, so we can clean this chart up, because I did some movement to the upside, movement to the downside. We have so many of these. But if this is the prior high to low, we still need to, on a reversal, take out the 618 to the upside before we get too excited. So I'm going to move this one more time, give you a fresh page, move this over here. And what does this look like? From the prior high, move that out of the way. From the prior high to the low, before we start getting excited, we have to take out basically our EMAs. Magical Fibbo line. And I'm going to show you something I'm doing with the programmer. I'm going to take these EMAs and I'm going to fill in the space between them to make it like a line. I've already done it on NinjaTrader. So it's the two EMAs, but yet they're a line, kind of like a ribbon. So when they're kind of choppy markets, you get a very thin line. When they start trending, it starts to thicken out. Like this AA, for example, has been a little bit of trend as of late, and we've been getting a little stair stepping. But you can see when the line starts to get thick, it is still the two EMAs, but it's a single line. I like this better. So I will be getting that on MetaTrader, and I will be having this come out on TradingView as well, where it's a ribbon, if you will, instead of two separate lines. It just looks better. Okay, just an FYI. So what does that got to do with this move? Well, we need to take that out. Randy, when we start bouncing, if this can grow some legs and we close above the EMA area, magic Fibbo line, then it sets the tone for extensions. That's kind of like we call it the magic Fibbo line, because once you take it out or you use it in a measured bounce, you start focusing on some extensions. Highest probability that we're going to go to 113, 115 up here once we get above this area. Only question is this bottom in place? Well, last time we were down here, we got a nice little bounce. So I wasn't exactly convinced that this is the bottom yet. Am I 100% convinced here? Not really. I really start to feel better when I see us take out this area up here, this 106 level. So if you look at the way this has been moving, if this bounce can start to take out that prior swing point, which is kind of a battle zone from over here, form a support, 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 and then it turned to resistance here. If we can do that, then that starts to set the tone. So if we can break this quadrant about 106, which is that swing point, then I think we're definitely going to make a run for a couple of hundred more points around that 108 where the EMA is sitting. And we can take that area out and start closing above that 108. And remember, it's the candle body, not the wick. Then that says a 75% chance we're going to 113, 70 plus we go on to 115. And that would start to set the tone that this bottom would be in place. But we're not there yet. So we still got to get a nice little bounce, take out the prior swing point. That would be a start. Take out the EMA. That would be number 2. And number 3 would say we got a very high probability we're going to visit these guys up there. Fair enough? All right. Same thing with the pound dollar. Is this now the low? Well, we went down to the extensions. We kind of talked about this, that I don't think this is quite over yet, as the dollar still could possibly grind a little higher. This could possibly grind a little lower, but I'm not convinced that this is the bottom just yet. But what do we need to do? From this high to that low, we got the 618, and again, right around the magic Fibbo line. That's what I'm going to start calling it. You can see over here, when I go into my indicators, magic Fibbo line, right there, magic Fibbo line. All right, so when we can start crossing above that, then it sets the tone for the pound as well, that, yeah, we get above this, and right now the pound roughly about that 127 level. So we start closing above 127. It's kind of like the same scenario. We had this big move here. We had a nice hearty little bounce into this area. Then we made a new lower low. So we started getting above that EMA, that 127-ish level. Then it sets the tone at a very high probability. We're going to go up toward 136, 137, 38, 142. So I haven't changed my tune. We just got to decide, is this the bottom reversal yet? Or do we still need to push a little bit more? That's where the dollar index comes in, because if the dollar goes popping and starts pushing toward that 111, 112, we're probably going to see this push toward 120, maybe 119. But we still haven't taken out that bigger picture. Let me remove that. That bigger picture from the low to the high. We got a 618 about 115 down here. So we don't have to go that low to test it, but I still think we're going to get the reversal and start pushing much higher, like we've been talking about for a couple of years now, that I think this retracement will ultimately end in a higher low before we start making some higher highs. Question is this higher low in place? So we have the tools to help us decide on when is the highest probability that that low is in place. And that is, we're starting to reach extensions. That's usually a good sign. It's a major battle zone. That's so far so good. Now we just need price to prove itself. And first move would be to get back above this 126-ish, 127 level right here. Let's say 126. That would be a nice move. And if we get there, then we're likely going to go toward the EMAs, our Fibbo line. And if that happens, then we got a 75% chance we're going to 136, 70 plus, we're going about 138. Everybody clear? So up and until price proves otherwise, it's possible we could still get a little further flush if we don't hold this 120.80 area. Let me get that out of the way. 120.80, which we almost touched. If we don't hold that, then we're probably going to come down about 119.70, which represents the swing point lows over here. So this is very strong support. I kind of drew this box a while back right there, but this is a big, strong support area, and we can bring it down just a little bit further with that matching EMA. This is strong support. So this may be the end. But just like I said with the euro or the pound, when do we get very confident that this bottom's in place is when we start taking back out. First part is a swing point from the prior move, and then it is the EMA or Fibbo line here. Once that is, then I can say with great certainty, this is over, that is the low, and we're going much higher. Well, inverse relationship would be the dollar index, and it's just the exact opposite. From this low to this, let me get this one out of the way. From the prior low to this high, this is in the way, I got a few things in my way, sorry. Here we go. To the new high. If this is over, then what do we need to see? Like to see some downward movement, sure. But then we need to go from this low to that high. We got to start breaking below about this 103 level, 103.90 area. So Randy, when can I call this over and we're ready to go down? We start breaking down. We break below the EMA, that Fibbo line. Then we have a 75% chance we go on to 98. 70 plus plus, we go on to 97. Onward and downward we go. So this is why these levels should be on all your charts. These EMA, Fibbo, magic Fibbo line, because it kind of sets where the market is likely going to go from there. Gives you, or we call this the market GPS, because once you take it out to the downside, then you go to extensions, or you, on the prior high to low, when we started breaking this to the upside, we broke above, we started breaking it to the upside, then we were highly probable going to these targets. We reached it, and then we extended to the next target, see it? Right at it. So this is why this is possibly over, where this move manifested when we talked about breaking above the EMA and then running toward these targets. We gave the 107, the 107.70, and said maybe we go up to extend a little further toward this 109 target. And look, we hit it right at it, like a heat-seeking missile. Amen? So in order for us, just like we did this reversal, we had the high to the low. When we took that out, it set up where we were going. Well, this is the same. We start to come back down from this low to that high. We take this EMA out to the downside, then we have extremely high probability we will make new lows and head to the 98, 99, 98 level, 97, and extend down towards 94. So in closing, that's what you need to keep your eyes on. Is this likely to start reversing? After that big run, we need some sort of pullback, but is it going to be a simple pullback for another extension? So we can't continue to rinse and repeat. From this high to that low, we reached the extension. From that high to that low, we most recently reached the extension. So if we do get a pullback and we start bouncing, then we kind of do the same thing in a smaller scale. We get a high, we get a new low, then we say, okay, we break this level, then we go to the next extensions. But be careful. This is at or near a top, in my humble opinion, that is. And only way I change my tune is if we start closing above 112-ish up here, then I think we're going to push toward 115, 117. Okay? But that is a huge if. Because just like I showed you before, this level up here has massive resistance. All of this area is massive resistance. Got it? Right there. And we're testing it. And why did we go into above the 618 here? And where did we run to? That 1618 level on the prior high to low. Now, this is typical. That's why I was saying we're likely going to reverse out of here. I still think so. Now we just need price to prove it by doing what? Because sometimes you reach the extension, you come back to the EMA bounce and still go a little higher. Maybe we do that, then we fail, or we start failing here, break below the EMA, then it sets the tone to the downside. Amen? So be careful. I would not be making long moves on the dollar index from here. I wouldn't be heavily going short just yet either. Just be a little cautious until price starts to force itself and prove itself. And then once it does and manifests, then by all means, I think we're going lower. And I think we're going to get a lower high, lower low. Even worst case scenario, we take out 112, we go up to the extension, then we start all over again from a new high. We're going to get a new low and a new lower high and a new lower low. But over the coming years, the dollar index isn't just going to keep going 120, 30, 40, 50, 60, 72, onward and upward. We're going to come way down. It's just a matter of time. And Elizabeth, I'm coming to join you, honey, is on the horizon. So that's part of this decline in the weeks, months, and years to come. That's why I warned you when I said the top in reverse was likely here. It would take many, many years before we get to our target down here. And it's already been 2+, and we're still right in the thick of where we were. So that's why it could take 2 more, 3 more. We shall see. All right. What about our carry trade? It's down this way. It's still hovering. Be careful. I did take profits on this because we reached these extensions we had talked about. Yes, the bigger picture, if the dollar does grind up a bit further, we still could go toward 165, 168. We do have that measured bounce off the weekly, which I'm not saying this is out of the question because from that high to low, we closed above the 618, but we're struggling at the 786. And I talked about when this bottomed here, we'd go to 160. We went to 160 plus. Then when we bottomed here, I said we were likely going to go at least back toward that 157, 158. We're there now. So this is why I'm taking massive profits here. This was on the house's money. This is on the house's money. So you take the house's money and get back in and make more. It's just time to take profit. I'm not saying we're not going to go up here. There's still a 75% chance we could grind there. But I want to see the dollar start reversing because it's in its level where it's likely to reverse. This may be the end and we start coming back lower once the dollar starts to really weaken. But it doesn't mean even if the dollar does start reversing that this dollar yen can't go higher. Why? We're going to get into that in a moment with the Fed. Fed was so anxious, we're gonna cut rates 4 times in 2024, and we're gonna cut rates 4 times in 2025. Remember when he said that? Well, we got some problems, Houston. We have a major problem, Houston. Looky, Emil, look at where we are. They cut rates again. Look at this baby popping. 4.4, 4.48. What happens when this 2-year maturity rate crosses that red line, starts going higher? The I'm gonna cut rates is going to turn into Ralph Cramden going, I'm gonna have to raise rates. So the big picture, and we've discussed this many times, I'll go out to a weekly, is that the Fed doesn't dictate the rates. They chase rates. Absolutely chase rates. So every time the Fed gets above the maturity rate, something bad happens. Right over here, they were above the maturity rate back in 2000, dot-com bubble burst, had a big market crash. This one over here, when the Fed got above the maturity rate and it started to decline, what did they have to do? Cut rates to follow. And this was the big housing debacle. I think they call it the GFA crash, if you will. But it was the housing debacle with all of those toxic. Oh, it was awful. But we got that crash here. This one again, we got the Fed rate was above the maturity rate. And even though it was COVID that ended up coming down in here, the writing was on the wall. So look at it. So I'm not saying this is the end, but they got above, and then they had to aggressively, right here, they were aggressively raising rates, right? This red line, that's the Fed fund rate. They were aggressively at the fastest clip in history. They were raising rates because this blue line took off. And back in this area, remember when they were aggressively raising rates? We didn't start, the markets were pulling way back. We had that big October 22 sell off until the red rate got up here and the Fed started to catch it. Then the markets kind of chilled out on the of 2022, bottomed and reversed and went on a run while we went sideways. So when they have to aggressively raise rate, the markets tend to go down. What does that mean? Well, the markets, they don't like uncertainty. And if it's uncertain whether they're going to cut rates or if it's uncertainty how many times they're going to raise rates, the markets do not like uncertainty. So during this period when they were raising rates, this big run here was where we had that big market pullback of October 2022, big market sell-off. So what if this continues to push higher like I warned you? Remember, everybody else was talking rate cuts, rate cuts, rate cuts, rate cuts. It's all about rate cuts. We're going to cut them 4 times this year, 4 times next year. It's all about rate cuts. And I said, not so fast. Oil prices are due to bounce. And when oil starts to kick out, if it does go on a run into $90 and $100 range, then everybody's going to have to readjust their pricing and inflation's going to come back with a vengeance. And old Mr. Fed's going to definitely have to start raising rates again. So this is what I warned you about, right, Ian? Talked about this the last time. Let me move this down and zoom this in to see the most recent action. And also, if you look at, see if I can move that this way, move this down. There we go. And I warned you about, since this move up, what do we have? A 3-wave move. And now, Ian, what are we crossing? Well, we just got to go a little bit further, right around that 4.5 from that prior high to low. We start getting this moving up. Talking about the blue line, we start going just a little bit higher. We're talking another 1.5 decimal point. So we're at 4.4. We start getting above 4.5 and change. Then there's a 75% chance we go into 5.4. So, yep. So you mean to tell me this Fibonacci retracement extensions works on something like the 2-year maturity rate? Yeah, works in all markets. And as they held price, they cut aggressively here, did a big cut and another cut. And ever since they cut, Randy, look at it, this thing's been ramping up. And then it kind of bogged down while they waited and paused, and they cut again. Now this thing's starting to break out yet again. It's taking out the prior high, and this is looking like it wants to go up. And what happens when we start crossing the Fed rate and this blue line goes higher? They have to raise rates. And that's more uncertainty for the markets. Well, if they're going to raise rates, well, how many times? How long is it going to have to raise it? And when's it going to stop? So this is why I think the markets are still likely with the Trump inauguration get a bounce, but we're going to get the big inevitable, Elizabeth, I'm coming to join you, honey, market crash. It's coming. So is it later when we get some more raises and hikes in here, then we do it? Or is it sooner? But we discussed that in great detail. So keep an eye on this because, James, if we end up crossing this line up here, which is, look, less than a point, less than a percentage, tenth of a point from 4.4 to 4.48. Wow. So if this baby keeps running, what's the Fed going to have to do? And it starts crossing this level and we go higher and higher. Well, kind of it's fitting. We start crossing above this level, which would put us about 4.54-ish. Then from this high to low, it sets up, well, the maturity rate's likely to keep grinding toward that 5.4, maybe 5.6. Maybe it continues toward that 6.2 up here. Well, I can assure you, the Fed doesn't dictate the rate, they chase rates. So if this baby goes breaking out, then the Fed's going to have to raise rates to catch it. Just like they did over here. When that baby started running, they had to raise rates at the fastest clip in history because this baby ran off. Well, we could easily start extending and running off again and leave the Fed rate in the dust. So that means they're going to have to raise rates, maybe even aggressively again to catch it. We shall see. But I warned you about this years ago when I said that once we start to get the rate cuts, doesn't mean it's over. The Fed might do what they typically do. They too late to the party, and then they too late to up here. I don't think they should have raised rates here and kept going. When they caught the maturity rate, they should have paused like there, but they paused after they surpassed the Fed rate, the maturity rate. And then they had to too aggressively cut rates. And now this thing's taken off again. So it's a mess. And when I heard Janet Yellen say that we're not going to see another market crash in our lifetimes, whose lifetime is she referencing? And when she makes a statement like that, just like it was transitory inflation, yeah, transitory. Sure it was. That we're not going to have a market crash in our lifetime? Woohoo! I beg to differ. That crash is coming, and it's sooner than later, as we've been discussing. So, any questions on this? This is a tool I use to kind of give me insight to when the Fed's going to raise or cut rates. And as I warned you, when this thing started to fall off and the Fed was left up here, what happened? Starts to fall off, the Fed cut rates. And they did it, that they kind of surprised and did a half a point. And then over here, another quarter point. And ever since they started cutting rates, maturity rate says, after a three-wave correction, whew, that's why I warned you, we're likely going to go at least retest this 4.5. That's typically what it does. So I can't say I guarantee, James, they're going to have to raise rates. I guarantee they're going to raise rates. Well, if this baby runs off, I guarantee they're going to raise rates. Sure. But this thing maybe comes up here to then start crumbling. And maybe we get the market crash and yeah, they can continue to lower rates. Maybe. But I do think we're still going to get a pop in the markets. So what happened today? Well, let's look at the pound yen. Randy, I hope you took some profits when we hit that extension up here, that 1618 up there. I hope you took some profits because I know you're in that pound yen. And I'm not saying it's over and we can't get another big push. But this was when I start to get these high lows and we start getting those extensions, that's when I start to take profits. So I know it ran from that low down here over 1,000 pips. I did, but not enough. Okay, it just comes with experience, and you start seeing these extensions up here, you kind of got to watch it. That it's a good time to take profits because if the thing pops and continues to go, then no harm, no foul. And as they say, you never go broke taking profit. Now, I won't say that this is over and we're going to go tumbling, but I'm watching several indicators and idea we're still at a higher low is okay. If the dollar runs some more, we could possibly get a little deeper retracement. But I'm going to give you another signal when I think it's bottomed and we're ready to go on a big run. We can potentially do this again, but I really wanted to see this. This is the problem. From the prior low to high, we're already, let me clean this up. There's so many on here. We've already taken too many of these out to the downside. And that's where I really take massive profits. Let me get some of these, so many on here. 1 second. And get this out of here. I'm on a daily. Okay. So zoom in from this prior low where we talked about a beautiful place for a bounce. From that low to that high, we came down to the 786, right? 786 is holding, and now we're starting to hold the 618. When do I go bullish again on pound yen? We have to break above this EMA, this level up here. And I know it's a couple hundred pips to get up there, but in order for us to start getting bullish, we need to see this not only hold. So here's my support zone down here, 618786, which we did dip below, but we didn't candle body close. So that's fine. This is why I talk about the candle body, not the wicks. So this is a support zone. And I guess we can theoretically change this, of course, to green, make it light for the time being. So this is a support zone. As long as it holds, great. Well, what now? We got to break back above those EMAs. So when do I start getting bullish? From this prior high to low, we need to break above the 6-1, the EMA, and roughly above this one that's 95 area. We start closing above 95, then we can start targeting 199 area, maybe 200. So what's that? This bounce closes above the EMA, that's number one. Closes above that 618, that's number two. Now I'm 75% chance we're going to 199. Another 500-point run from that point. If you're scalping this on the lower time frame, like the 4-hour reversal on the software, that's fine, but you need to be taking profits and be in a position of authority so that if it does reverse and give us another push lower, then we can take some profits off of there, right? So what's reversing right now? 4-hour. This looks good for a little bounce, scalp-wise. We got the extremes, we got the trigger. If I'd have set that, it would have automatically entered for me. And yes, but now that what? The 4 hours hooked and crossed, why would I be taking some profits up here? Because my 1 hour, this is scalping mentality, my 1 hour made it toward overbought. It may go higher still, but once I'm in a position of authority, if it pips me out, I make more profit. If not, and it continues, then I got a little something running for a push. But definitely when you get to these type scenarios and we come over here watching, so far we're holding, but until, because this could easily rally up toward that EMA 618, maybe even a little further, hit this level, then turn down and go further toward 186, 185. That's possible. That we can't break and get more bullish to go up here, then we can reject off the 618 to the upside for another push lower toward the downside. So this is how I do it. I do my swing point. This is the critical swing point high, critical swing point low right now. This was the prior. Now we have new ones. Now, is this the bottom or are we going to come down here? If we can't break above this 195 level and hold it, then I would say we do that, then yes, we're going up to 199, 200. If we fail and we rally anywhere to the EMA or maybe 195 and fail and get turned down, then we start targeting 186, 185. That was over 1,000 pips right there. And it went right back to the prior swing point, which happens to be one of the bigger extensions if you run this from the prior high to low, it runs into each other right at those extensions. So that's why after that big run back into some area where we reversed the previous time, that's not a bad idea to take your profits. Well, I'm glad it worked out for you, and let's set up the next one. So to go bullish, I want to see this break above the EMA and that 195 area. We do that, then we can start targeting 5 to 604 plus 500 pip move, maybe even much further. But that's a good 500 pip move. Otherwise, if we get this little bit of a rally and this thing fizzles and we start turning back down, then we do the same with start to use extensions toward the downside. Amen. So from the high to the low, we get bullish. We got to break the 618 to the upside. From the low to the high, we did take this out. We closed right at it, right? So this is why I'm still watching it. Look where that closed. The wick came down here, but look where we closed, right at it. Look at this one. We dipped below, and this is today. We hadn't closed below this level yet. But if we see this type of move where we rally, we get turned down, and we close below that 192-ish level, candle body, not the wick, then I start targeting 186, 185 to the downside. It's that simple. It just takes a little nerve and a little guts and a lot of patience to wait for price to finally get into one of these high probability setups. Because if you try to buy the lows and sell the highs every time, you're going to get sliced and diced. So this is why I force this. And we're below the EMA right now, so I'm still a little bit more bearish than bullish. When we get back above, then I'm more bullish than bearish for a period. But that's kind of my line in the sand. When you're above it, you're more bullish. You're below it, you're more bearish. And where are we in relation? This low to that high where we got that big run, we're testing a critical level. We did break this. That's if this thing was going to go up, I would have loved to have seen this run, this baby hold here, and then go bouncing. Then I'd be all over the 195, 200, start working on the 205, etc., much higher. But we did, and then we broke below. Now that's okay because it's still holding the support zone. But we had to get back above. Then we can talk about continuation. Otherwise, if we do this and then we fail and we get blocked and then we turn down, then it's to the downside. Okay? And that's still hundreds of pips down or hundreds of pips up. We just got to let price prove which way it's going. And at that point, it's not a guarantee, but it's a 75% chance we either go higher or a 75% chance we either go lower. And that's when I like to take my runs when you get to those percentages. Fair enough? All righty. How about that euro pound trade? Starting to get a little legs. Yen, well, the pound dollar has been going down. Euro's been kind of holding a little bit stronger, so the pound's a little bit weaker than the euro. So that means we're likely getting that bounce. But that was the weeks ago. We had a monthly, a weekly, and a daily. And I told you this thing's going to start bouncing, but it's going to take a long time. So I'm up in profit on this, and I'm in a position of authority so that if this thing reverses and goes back down, no problem. I've already made profit. And if I get pipped out for more profit, great. If not, this baby continues to go higher, by all means, let's let it go. So we're coming to a critical point why I'm taking profits in this area. Can you see it on the chart? Prior high to prior low, we're getting right into that zone. So this is why I'm in profit margin. I'm looking for this to make a run toward 84.70s. Right, we're above the EMA. That's bullish right now. We're likely going to make a move toward that 84.70, which is only 30-something pips away. So this is why I'm in a position of authority, allowing this to continue to run. And yes, if we can start to take out that 85 area, then there, is a 75% we're going to 86.80, 70 plus we're going to 87.40, and onward and upward we go. So this is why I am in a position of authority, because if this thing turns down, then we could certainly continue to go lower, or this baby's at the cusp of telling me we're about to go very strongly to the upside. But I was willing to take this before we got to the obvious, because I had a monthly, a weekly, and a daily oversold talking about that moving up. Amen? All right, so keep an eye on 85. If we close above candle body, not the wick, above 85, then we got a 200 plus pip move coming. Amen? And that would be up to these extensions. All righty. So what happened today? Is a little fudge making? What's going on? PPI was released today before CPI. Now, I always get a weird feeling because normally it's CPI first, then PPI. And they occasionally will do the PPI before the CPI, but the market gets a little freaky when that happens. So we get a bounce today. Why did we get a little bounce? Ian, email? We got a little bounce because this was better than expected. It was 0.4, the consensus 0.3, came in at 0.2. Prior was 3, went up consensus 3.3, came in at consensus. X food and energy, 0.2, came in at 0. Woo, yeah, that's good. Producer price index is better than expected. When in all actuality, this is still showing inflation. This is just kind of back at the norm. So this doesn't mean inflation is over. You know, people misread what these things are telling them. When it's 0.2, it's still inflationary, meaning producer prices are still going up, and it's cumulative when we were way higher during that big stretch. So this does not mean that inflation is totally over, but the markets may think, well, if this is the case, the Fed's going to continue to cut rates. I beg to differ, my friends, because that's kind of off the table. And did I change this from my DGS2? I hate when I do that. Let me DGS2 and my Fed futures fund rate. There it is. And then toggle, get this out of the way, toggle this guy. So don't worry what PPI says. Don't worry what CPI says. Don't worry about any of that. I can assure you, if this thing starts taking off and we cross above their current rate, Fed rate right here, and this is the maturity rate, that baby starts running off like reference of this blue line, then they're going to be raising rates, not cutting rates. So just because we get a little, woo, yeah, inflation is over. No, it's not. Look at X food and energy. Even when they tweezer out year over year, 3.4, came at 3.5. So this is not over. And we could be setting up a big disappointment for tomorrow, or maybe something wonky is going to happen here. This is tomorrow, CPI. Consensus 0.3, somewhere between 0.2 and 0.4. Year over year, 2.9. They're looking at about 2.9. So that's not going down. Even consensus is not going down. X food and energy, 0.2. Maybe we go down. And then X food year over year, 3.3, kind of holding steady. But even if this stays there at 0.2 and this stays at 3.3 like they're projecting, that doesn't mean inflation is over. It's still inflationary. So please don't misinterpret that if this prints at 3.2 or 3.3, then the Fed's going to cut rates again. That's kind of off the table through, that we have a Fed fund, a Fed meeting at the end of the month. I think it's, what is it? The last week, I think it is. Yeah. And Are they going to cut rates then? I would say absolutely not. This is scary. And I don't know if the Fed looks at this, but I think they're paying attention to it, obviously, because they chase it. When it's going down, they chase it. When it's going up, they chase it, as I went through and illustrated to you. So keep an eye on this because this baby still going higher. I don't care what CPI says, what PPI says, what core PCE says, what any of those say. If this baby starts taking off, Fed's going to raise rates, period. All right. So where does that leave us? Well, that brings us over here to the markets. And we've been talking about since the last break. I talked about ES making a nice run. I did it again. I did it again. DGS2. I promise I'm going to stop. Fed fund rate. Let me toggle this baby again. Okay. Leave that one alone. Here's your ES now. Almost. Ian, almost got to my EMAs here. Amen. Is this bounce going to lead to a breakout? Well, you know where we stand. This low did reach the extension, so that's good. PPI got a nice little pop in the markets because of that. But where's it going? Not until we start breaking this lower trend right here, trend lower of lower highs. We have to break that before we start getting bullish. Now, it's possible this could be the bottom reversal. We just don't touch this. It's not out of the question, but I still think there's a good chance that this could still, with this little bounce here, fizzle manizzle and still turn down. So when we left last time, we talked about we're coming toward these EMAs. Call this the magic Fibbo. And again, this will be filled in. Right? It's a solid line now. Once my programmer finishes the rest, but you can see this on NinjaTrader. So you can see this is now a solid line instead of two separate lines. All right. I digress, but let's go back. So we didn't quite reach this on this pullback. I do think we're still likely going to probably fizzle and go lower. So when do we start breaking out? I kind of said this the last going into the break. I said that as we start moving toward the inauguration, we're probably going to see price grind down toward those EMAs. Then post inauguration, we're likely to see a bounce and probably go on to new highs. Is this the bottom? Well, we did this where we rallied before once, failed, rallied to a lower high, went to the extensions again, made another low. So are we going to do it a third time? Is third time the charm, where we rally, we fizzle, and we come down here? I still think there's a good chance we can come here. When do I change my tune? When we start breaking this prior swing point and this downtrending line of lower highs, then we can start shooting for our extensions toward the 61, 6,200, 63, etc. So I don't think this is over. I'd definitely be taking profits on that little PPI bounce. With CPI coming out before CPI, we may get that flush. And our inauguration is not here yet. It's next Monday. The markets will be closed, but we're probably going to see a lower high, lower low. I still think we're going to go toward those EMAs. Same thing with NQ. Didn't quite reach it, but where we're likely going toward those EMAs. Everybody feeling me? So I'm looking to get some bullish move after we get down here. So we're talking somewhere around 20,200 down to maybe 19-ish, kind of in this big green box. And you can see these represent some extensions down here further. But we reached the extension here to bounce, but we're not holding. So the only way I get bullish, I don't even have to run it. I can see it from the prior high to low. We got to break the 618, which is this descending trend line of lower highs. See it? So we start breaking above that, then by all means, I'll start targeting 22.8, 23.150. I do think we're going to go up there before we're done, but I think this is part of the move we're going to see a little further down. So that pop, be careful because I do think we're going lower. Then I'll look for a bounce. Y'all remember what we said last week looking at our FI, SI, what is it? S5FI, that Randy, I even pointed this out. I drew this for everybody. I said we're likely when we start to see that little bit of a bounce that we're probably going to get this little flush on the 50-day, rally to flush lower, and likely, let me stretch that out a little bit more so I can show you my 10 level. There it is. Now I can move this. So I kind of was saying that as we start flushing down toward the daily EMA, we're likely going to get this little rally to flush down to maybe 10 and lower. This is what ideally I'd like to see. Then I could buy, I don't care how you trade it, buy call options on ETFs, buy futures, however you want to trade it. This is setting up a big bounce for our markets. And I kind of generically say markets, S&P, NASDAQ, etc., that we start to get this flush down to 10 and lower. Whenever we get that, we get a reversal. 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 You get the point. We get a reversal. We get a reversal. We get a reversal. We get a reversal. So the normal resting rate for this little barometer, as I call it, you can't trade this, but it's a barometer. When we're at between 20 and lower, the markets are oversold, ready for a bounce. And when you're at 80 and above, the markets are overbought, looking for a correction. And where were we? When we were at all-time highs, I warned you. And especially over here, we needed a correction. We rallied close back to that level. So when you go out to the outer extremes, that's the 10 and the 90. Man, anytime I'm in the markets and I see this is above 90, then I'm looking for a shorting opportunity. When I'm 10 or lower, I'm looking for a buying opportunity. So I was painting this Picasso right in that we're likely going to get this flush. I'd love to personally see us 10 and lower, at which point price is breaking out and reaching, breaking down that is, and reaching these EMAs. So we get the perfect storm. We get this pricing down here around the EMAs are lower. So that's around my 20,200 slash anything lower than that. And which could include not only 20,000, but maybe this 19-ish area, this box. So price is in the box. And then we come back to this picture and we're at 10 or lower. That's a beautiful time, Ian, from decades of experience, that this is a good opportunity for a reversal. Amen. And I think this reversal based on the post-inauguration bounce, we may get this baby to grind all the way back to 80, 90 and above as we go on to make all-time new highs again. That's kind of the plan. So we're going to continue to unfold this each day. Do we get a further push? We get that push toward the EMA. And when it does, I suspect you're going to see this guy at 10 and below. And then we went on to continue this story. Let's see over here. To continue this story over here. And let me go back to my heat map. And I said, well, that's the 50-day S&P up here, 50-day. What about the 200? 200 still above 50. So that still gives us plenty of room for this thing to continue to drop a little bit. but I'm looking for on this one something like this. I don't think, obviously, this is going to get down to 20 and lower by us moving down to that EMA toward that uh, with ES. I was looking at NASDAQ, but let me go back to ES and show you what those numbers are. I keep changing it when I shouldn't. I already have it open. So ES, we're talking 57/5600. I want to see that this lower high, lower low, we push around 57, 56 area in this zone right there. So we start pushing 56 or lower, and I come over here and I see on the S5FI, we're down below that 10 level on the 50. Well, this one is obviously not going to push way down here. This is the 200, right? I can see up here. That's the 200 moving average. But this is kind of what I'm thinking is going to transpire in the months to come. That we're going to come down. Maybe we come down toward this trend line, kind of higher lows. We dip down here as we reach the EMA, then we reverse and go back up, and we start grinding higher. And maybe we push to 90 and above as we go to all-time highs. Then as Elizabeth, I'm coming to join you, honey, Doge takes over, start cutting 2 trillion out of the spending budget. We get the, I'm coming to visit, Elizabeth, I'm coming to join you, honey. And then this baby is going to go from up here down to here as we get that big market crash coming to see you. Got it? So that's kind of what I'm thinking this graph's going to look like. We're going to get another higher low and then start pushing toward extremes again, above 80, maybe even above 90 as we go on to make all-time new highs. So the plan is, whether you're looking at ES, we want to see this failure come down in here. We want to see our S5FI for the ES or for S&P to get to 10 and lower. Then that sets the perfect storm for the bounce. And then for the NASDAQ, we're going to do similar. That level is about that 20,002-ish range to maybe a 19 range. I'd like to see this flush down over the coming days, whether it's the rest of this week and the next week, post inauguration, maybe next Tuesday, we start to see a bounce coming after, because remember on Monday, the inauguration, markets are closed. The futures markets will reopen at, I think, 6 o'clock that day. So we will have some price action going into Wednesday, Tuesday, but we shall see. But that's the plan. Be careful. I'm not saying load the boat short. We kind of already had that move down. This might be the end. We get a high, this low, high, higher, low, higher, high. When do I get bullish? We got to break above these downtrending line, then take out the swing point. Then sure, we're all over it. But I think we're going to get the flush down here, likely going to get that flush. Then we're going to get the post-inauguration run into all-time highs. And then we're going to get maybe first quarter, second quarter, somewhere when Doge takes over, we're going to get the Elizabeth, I'm coming to join you, honey. Amen? So far, this has been pretty good. That we're grinding our way down, right, Emil? What do we talk about? AMD and some of those going lower, still pushing. Wait, because I think NASDAQ still got another push. Even with today's little pop temporarily, look, it's selling right back off. So this is likely coming. I talked about it before the Christmas break. We were coming down here. And as we're moving in toward the inauguration, that's where I think we're headed. Post-inauguration, we're going to reverse somewhere in this area. And we got a couple of tools we want to look at. And that is, this is the S&P, but we have NASDAQ. And I still want to see the same kind of flush like we're talking about, that this bounce, remember I said the same thing, we're probably going to get a flush to come to 20 and lower. And I would love to see us at 10 or lower, because again, when barometer gets there, we get a bounce, 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 we get a bounce. Every time we get a bounce, we get a bounce. Kind of scratch record, isn't it? So what is this ideal storm for the NASDAQ? We start to see price at 20,200 or lower, and we start to see this little graph, which is the officially, what's the symbol on that? It is $ NDFI. That's how many companies in the NASDAQ are above the 50-day average. And we're pushing down. And I'd like to see the flush because when that baby gets to 10 and lower, we get a reversal. And I'd like to see on the chart, we're down here at the EMA or lower. When that happens, that's a good time to buy some call options on IWM. Maybe buy, if you trade futures, look for a reversal. So that's the plan. So up and until then, any rally should be sold, in my humble opinion, until we get to this area. And if we get this area, like I'm thinking, and we go over here and see this baby at 10 or lower, man, that's like a beautiful setup. That's breaking the 618 to the upside with the 75 plus% chance we're going higher to that extension. Well, we get down below 10 and we're bouncing off in around that EMA area, that magic Fibbo line. It's setting up a nice bounce. And in my humble opinion, I don't mean just a simple little bounce to a lower high and a lower low. I'm talking about rallying all the way to all-time new highs, which would push us back above 80, even higher. That would be ideal. Amen? Everybody good? All right. There you have it. So that is the NASDAQ. What about the Russell? I said because the Russell was already at the EMA, as the ES and NASDAQ had started pushing toward their EMA, the Russell is likely to extend down toward this 2000 range, 200, 2000. Depends if you're looking at the big number or you're looking at this IWM. But this is what I'm kind of thinking here, that we're probably getting this rejection here. We broke below the EMA. We're testing the EMA to the upside, and we're going to flush down. Okay? Now, what do we need to see there? Kind of rinse and repeat. This thing works for these markets, and it's a beautiful thing. So we come over here to the Russell, refresh, and we see we're already at these extremes. And we're likely going to get another flush as we drift a little bit lower. So, Emil, this is what we're looking for, Mr. Tucson. We're looking for this to flush below 10. Love to see it. Every time we get to those extremes, what happens? It reverses, it reverses, it reverses, it reverses. You get the point. So when you start to see this, and where is this? This is on a bar chart. You don't have to have an account. You sign up for a free account, that is. You don't have to buy for anything. Bar chart, and you type in those symbols. This one is $R1FI, and that's for the Russell. But if we can get below 10 on the Russell, and we see price, whether you do an IWM down around 200-ish or lower, or if you use an RTY, for example, in futures, then I would look for us to be somewhere around this 2000 range. That we're probably going to see this rejection push lower. And if we can get the Russell somewhere around 2000-ish, IWM somewhere around 200-ish, and I don't mean 218, like 202 to 195, kind of in this zone. If we can get that, this is where I would love to see this fizzle. We come down here, we get that RS, what was it, $F, what was it, RFI? this thing and we're down below 10 or lower, bingo. That's time and maybe we buy some IWM and look for a nice little bounce. Everybody with me? So I think we're coming below the EMA. Obviously, we're below it and we testing it again, but I think we're going to come lower to somewhere in this area when that barometer gets to minus the 10 or lower. This is a good time for a bounce. Amen. All righty. So that's where I think the markets are headed. That we're going to decline, even though we got a little bit of a bounce. Those have been taken out with ES over here. It was positive. Now it's going negative. It was positive. Now it's going negative. This one's still a little bit positive at the moment, but it's going negative awfully quickly. So the plan over the next few days as we go into the inauguration is to continue to get a flush. Maybe it's tomorrow's CPI that kind of does it and we get a big down day. Maybe we take out what little bounce we got today by day end, that kind of thing. But I think we're going to grind lower toward this area for the Russell while and I did it again. Here's my WM here. I got to quick change it. Let me switch that. There's ES. This should be my NASDAQ. And then this one is my IWM. So everybody good. We're likely flushing here on IWM while we flush toward the EMA on the NASDAQ and maybe into the 19s, 20,002 to 19-ish. And then ES is going to be 57 down to maybe 56, 55, somewhere in the zone from 57 to 55-ish, somewhere in that area. So we get the flush. We get our S5FI, according to which one you're trading. We get this S&P one, S5FI, and it comes, that's the 200. We get this one flushing down below 10, the 50-day, right? Everybody with me? 50-day below 10, we're good to go for a buy position. And that's in my humble opinion. I can't tell you what to do. I'm not a certified financial planner. I don't want to be one, but that's what my plan is to do. Buy and look for that big bounce post inauguration to get this thing to go ripping into first quarter. And what should bring us to back into these extremes on these grids and price wise, bring us to all-time new highs. And I still think we're going to reverse somewhere between 66 and 63, somewhere in that area. So what are we looking at price-wise? Flush down here, then grunt and grind in a stair-stepping affair to get up into the 62 to 66 range. Before then, we get the bigger one. And my anticipated move with the S&P, before we break 7,000, we're going to break 4,000. Amen? Before we break 7,000, we're going to break 4,000. And that's why I think we're coming down, bounce, rally into this zone, and then the big one. Okay? And we will kind of play that out by ear and kind of what I'm thinking as it's unfolding, but that's your bigger stair steps moving forward. And just to review, which we do, and I didn't do that earlier, but we always do on Tuesdays, is wave counts. So nothing's really changed back over here on the euro. Actually, nope, it is this one. No, it's this one. I got so many open. Is this two over? Maybe. Maybe that's the end. But we already discussed what we're looking for. From that high to that low, we got to break that 618. We got to go back above this swing point, which also ties in at 106, which also ties in the EMAs. And we break above that, break that, then we're going higher. Amen? So we got a little ways to go on the EMA break and then the, 618 break and the EMA break. If you wanted to see that real quick, I can just do that. If you're joining us late, here's the pound. So we need to get a big rally and break above the 618, break above the EMA, then we can target 136, 137, 38, etc. But until then, we may go lower. So if we don't hold this 120, we're going to about 119.70, 120.80. We don't hold that, we're going to go down about 100 points and test this level down here. At some point, we are going to get the reversal. But when the reversal happens, we got to take out the swing point first, then the EMA. We do that, then we talk about extensions to the upside. All right, what about our gold? There's gold in them there hills. We're kind of still holding at lower highs and still holding at higher lows. And if we can't get this thing to start breaking out and forcing the issue by closing above this swing point right around that 27-ish, we tested it twice to fail. If we can't break and close above this trend line / 27 and change, we do that. Then we're going up to 28, 29, 3,000. Okay? Otherwise, we might need a flush down here to the EMA, which would put us around 2,500. So be careful on black gold, yellow gold, that is, not black gold. We'll do black gold in a second. But if we can't break out, then we're probably going to get that flush. And all of this overlapping, chopping price action kind of warrants a flush. Amen? Otherwise, we close above, and you see us close above 27 and change right there. Then by all means, we could target 28.30, 28.60, 29.50, onward to 3,000. That's the legit review of gold at the moment. If we don't, and we start breaking the trending line to the downside, and we take out the swing point, then say hello to my friend at the EMA. Fair enough? Any questions on that? So if you bought this little bounce, I'd be in profit-taking mode because we may need one more flush down here before we go breaking out. Long term, we're still going to 3,000. No ifs, no buts, no ands. We're going to 3,000, but is it this first before we get up there? And this is a lot of overlapping, chopping action. All a wedge means is we're either going to break to the upside or we're going to break to the downside. What I don't like about wedges is sometimes it'll give you head fakes and you think it's breaking out when it goes down, and sometimes it'll break to the downside and then go up when you think it's going down. But I like the fact that we would break down toward 25 area to reach the magical Fibbo line and to bounce off of that. If I'm wrong and we don't come down here first, then we start breaking 27.25, swing point right there, that prior battle zone. As you can see, this is a battle zone that we've tested. Was former resistance, turned support, support, resistance, resistance, resistance. So we got to take that out before we start saying we're going to 28, 29, 3,000. Otherwise, if this fizzles and we start taking out like that swing point there, it sets the tone. We're coming down to 25. Okay? Then what happens if we get a flush down here? Then I'm looking to go long. GLD, something else. I'd push it out as far as I can go, but buy some call options on like GLD or GLDM. We discussed that last week. We have GLD. Love to see the same. Where this overlapping chopping price action, we just get a flush down in the 230s, lower 230s, and then look for the bounce. Or GLDM, which is the mini shares trust. Same kind of thing. Would love to see this flush down to 50 or lower to set the tone for us to buy call options and shoot for the moon as we go into 26, 27, as far out as I can go. But it's setting the tone for much further upside. And then, of course, we would start to use this high to low. Let's say we come down around 48 as an example, or 49. Then we can use the high to the low when we get down here, which would be over here somewhere. Then when we start crossing back above 52, we can then target 56, 57, 59, 60, etc. on our way up. Okay? So this is what I'm hoping to see. Big flush down to 50 or lower, lower the better, then a reversal up to 60. But give it time. Don't use an option that lasts a month or two or 3 or 4 months. I do leaps that give it plenty of time. Or buy shares and you don't have to worry about it. We get shares down to 50 or lower. That's a good time to buy because I do think we're not only going to 60, 65, much higher, but as gold starts to push into 3,000 upwards and onward and upwards, this baby is going to start pushing into the 60s, 70s, and you can buy some shares down here. Otherwise, use call options and push them way out. Silver, kind of grumpy and grinding, same kind of thing. Looks exactly like gold. Do we need silver to give us that last flush? Then the reverse. Oh, I'm on gold again. Let me do that again. Silver. I thought I clicked silver. It's not even as bullish. I kind of relate gold to Bitcoin and silver to Ethereum. That silver has not broken all-time highs where Bitcoin has, or I should say Ethereum hasn't broken all-time highs as Bitcoin has. Gold has broken all-time highs where silver hasn't, but it's a coil that's winding up, ready to go zipping higher. So do we need this last push before we reverse, or is this the beginning of a breakout? I definitely think we're definitely going higher. My targets for silver are still 35, then 40, onward and upward. And what I do like, Randy, from a higher perspective, it's got a lot of potential, massive potential. Look at this, massive potential. And we're not quite there yet. We went up to the 618 and tested it, not there, but over here. We reached that target, which I talked about all year last year. We were going to get to 35. We did it last year. I kind of planned. Then the next target will be the 40-41, followed by what? Well, we start closing above that 35. Then we got a 75% chance we go into 55. $20 move from a $35 to 55. That is huge. And we'd be breaking all-time highs. So the percentage that we go to 55, 60, 73 in the coming years is still very high. And from the high to the low, we just got to get a little more in the next run, which is coming. We're going to get above that 35. Then it sets the tone. We're going to 55. And that's when you can buy silver or SLV or some of these, just buy and hold. When we get that nod, then we got a big move going up, highest percent. Amen? So I do think silver in the future is going to be at all-time highs. We just got to get above 35 to set the tone that we're going there, high percentage. Amen? So any questions on gold and silver? Be careful with the bounce. Same thing with the weekly. This is kind of like I was showing you with Bitcoin and Ethereum. But look how gold from the prior high to low, not only did we break all-time highs, we're extending beyond the 618 and above, headed towards the 272. Look at poor silver. Silver hasn't even made a new high, much less start reaching the 618, pushing toward the 272. Right? So that gives us so much upside potential on silver. That's why if you're buying silver bars and stashing them, not a bad idea. And this thing's going much higher. Remember when it was down here and I said, buy, 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 buy. It's going to the moon. And even over here back in '08, talked about it doing. But here, when we had that overkill, I was like, man, it's a good time to get in. Boom. We got a lot more coming in the years to come. So we're going to get to 55 by the end of 26? Maybe. I mean, we still got 25 into 26. So this is why if I'm buying call options, I want to push it out to 26, 27, as far as I can go. I want to push that out. Otherwise, you can buy some shares and hold it until we get way up there. And SLV is typically how I trade it. There are many ways to trade it, but we took those profits. Remember, we talked about buying call options, selling a credit spread, bringing in the money to buy those call options. And we're targeting up there near our 35 in this 32 zone. So hopefully you took profits there. Depends on if expiring this year or next year, etc. But this corrective action is setting up another big move. So where do I think SLV is going? Well, it's the same kind of thing from that weekly. We start closing above this, which we already did. That's why we went to 32. But that latest is once we start breaking 38, then we have a huge gap. Obviously, we got 40 and some numbers in here. And that starts pushing 54. That SLV could be in the $50 range. Yeah. When we start to see silver pushing those levels and we start pushing 55, 60, 73, then SLV is going to be pushing those upper numbers, 60, 72. Everybody with me? So we've already closed above the 27. Silver has already acknowledged that we are going to 60. I like it. From that high to that low, we closed above 27. At one point, we were right around 30 and change up here. So we closed above that level with a candle body, not just a wick. So the writing is on the wall that we're going to 70, probably even 60 to 72 range. It's on the wall, right, Randy? Now, is it going to be a year? Is it going to be 26? How long is it going to take to get up there? But we're going there. That's why if I just buy shares, then I can just hold it till it's up there. Or buy silver bars and stick them in my safe or deposit box, whatever. There you go. But it's going higher. Now, in the short term, be careful because, Harold, we may get that pullback toward the EMA and break down to this little extension a little bit lower. So let me zoom that in. So silver's already in this area. So we need that flush. 25. Love to see this come down about 25. That would be ideal. So I want to see a flush below, then a break back above, and then a test before we go taking out. So if I can draw the future here going out months into 25, 26, etc., I'd like to see this flush down to the 25-ish, maybe even come near the 24-ish, somewhere in this area, to then start bouncing, and these, kind of drifting as we're going, maybe even start sloping down a little bit, but eventually break above, retest to set the next breakout. And this would go into 25, 26. And where's that breakout? Smaller term would be 32, 33, 34 on these, 37, 39. But on that bigger picture, we're talking up here, much higher. And on the much bigger one, which is the really one I love, is the weekly. As you see the bigger picture, that's 60 to 72. So in closing, silver is, believe it or not, Ripley's believe it or not. We're going to 60. We're going to 72. Is it 26, 27? That's the tough part. But is it likely going there? You betcha. We already, from the high to the low, already acknowledged that by breaking above 27. Again, we were at 30 up here on SLV. So that acknowledgement says we got a 75% chance we're going to 60. We have a 70 plus, we're going to 72. Only question is, how long is it going to take to get there? So on the weekly, wouldn't mind seeing a flush, even if we do this, where we flush a little further. And again, this baby's sloping upwards. So we get to that 25, 24-ish, because we're almost at 24 on this weekly. But flush down to the weekly EMA, get a measured bounce to set the tone for the extensions. Amen? And let's zoom that in. All right, Harold? Because we like those kind of deals. It's a much more better deal. So if we can get that push from this low to that high, we flush down to this zone, that would be good. Then we could start talking about potentially shooting for the moon. So I won't say we have to come all the way to the 23 zone. I'd like to see 25 or lower, which 25 is like in this area, and this is kind of sloping upwards. So what if it takes a few months before we, or a few weeks, whatever, and we flush down toward 25, and then we kind of hit the bounce. And what will we have here? From the lows to the high, a beautiful measured bounce. Ooh, right now, kind of like the dollar yen did. Came down on a weekly from the low to the high, did a measured bounce slash EMA bounce. Then it sets up extensions on the smaller scale, and much bigger scale is the extension we've already acknowledged, and that is my 60.72. What about black gold Texas T? Black gold Texas T. We're on the cusp of a breakout. I say cusp because we proved ourselves through a couple of things. We broke the swing point. We broke the EMA. We broke the downtrend line. Now we're broke the last trend line up here, the much larger one that I told you about for months out, way back here into 23, couple of years trend line. And now we're retesting the backside. So if we can go breaking above that 80, we're going to 90 and probably 105 up here. So my big targets, which I got to go to a weekly to show it. I think I already have it on here. Yep. There you go. 90, 105. So we do that, Randy. We close above, we hold this trend line, we take out that swing point, and we got a very good chance. Next stop, 84. Break that, 90. Break that, 105. Okay? Be careful. I said be in a position of authority, but this big run, and the reason I say that, you zoom in on this and you can see that's a hell of a run on black gold. This move, nice big run. And after this big run, it's time for a little bit of a pullback. So when do I get bearish again? I'm not going to get bearish again because from the low to the high, we got to take out the EMA and take out the 618 to the downside. Then the door is ajar to go lower. But we've taken out everything we needed to. Swing point, EMA, downtrending line, next downtrending line, even lasting longer. We're above it, so this is bullish. I just want to see a little bit of a pullback. Now, from this latest run, zoom that in, Harold, from this latest little corrective action on the EMA to the latest little move up, we want to see during this pullback, we would love to see this level right here around 75 hold. So we can retrace a little bit more, but I want to see 75 hold, then set up the next move higher. Okay. And what would some of those targets be? Unlike the ones we already have on here, you can use your 3.2 and say from that high, from that low to this high to this higher low, which puts us about 75. Then we could start targeting what we said a minute ago, basically 84, 84, 85. And then, of course, my 105. So we're going to go to 90, then 105. Any questions? So is this it? Well, remember what we had talked about, why I said we're likely going to get a bounce, and that's because our extension software was extremely oversold. Daily's grinding, weekly turn, so we knew the daily was going to cycle, had steep slope angle separation. Is the weekly going to end up cycling? Check out the monthly. It's hooked and it's pinched, so we're almost there. Randy, remember the hook and the cross, what it stands for? You get a PI hook, you get a trend momentum cross, you get slope angle separation, then the lower time frame cycles. The weekly did it, right? The weekly did it weeks ago. Got the hook, got the cross, got the slope, got the angle separation. And what happens when that occurs? The daily's going to cycle. No ifs, no buts, no ands, very few exceptions. That it's not a guarantee, but it's extremely high probability. And this baby grinded its way toward overbought. Beautiful. That's why I was saying take your profits. We said started taking on the 4 hour, then the weekly hooked and crossed. Now you take your profits when the daily's up there. Great. Could this thing come back down into this zone and even make a new low? Sure, it could. It's not a guarantee that it's going to break out. But if we hold from the latest move and we hold 75 and we start breaking back out, then yes, we target 85, 84, 85, then 90, then 105. But so far, I can't say this is over when a weekly looks like that. That's strong. Slope angle separation. My monthly is up. We just need to see if this is going to cross. And we're very close. We're pinching. We haven't crossed yet. So what if we and Bruce, we get this to hook and cross and we show some slope, some angle and separation? Then we're going to continue this journey until this weekly gets all the way overbought. This guy gets up here. This guy, including money flow, gets way up there, and price is going to continue to break out. Otherwise, what can happen? The daily can cycle down, we could slingshot lower, and we could even go flushing down. That's why it's at a critical juncture where we're located at the moment, right? So back over here to black gold. Could we get a daily cycle down and take this thing away? Yes, come back into these zones. We're already starting to come back into this one. And we could come maybe retest this, EMA, reverse from there. But that's why I want to see that 75-ish level hold. Initially, if we don't, then it sets the tone. We're probably coming back to the EMA. And if that holds, then we could bounce and go higher. If that doesn't hold, then we're going to come back into this zone again and maybe even need that flush as this overlapping price action. So if this is, taking it from this latest swing point, if this is part of my 1 up, 2 down, extend in 3, then my wave 4 correction cannot come back down in the 70 range. If it does that, then it sets up the tone. We're coming down to the mid 60s to upper 50s, mid to low 60s, upper 50s. Any questions? So I'm proud of what it accomplished. We broke the initial swing point, then we broke the EMA, then we broke the trend line, and we even broke the last trend line. Well, after that big run, we do need a retracement, but let's see if 75 can hold. If 75 holds and we bounce, then we start targeting 84, 82 to 84. Then once we break 85, we're going to 90. Okay? Any questions on that? All righty, let's continue. What about Bitcoin? Is this the end? I don't know. I really would like to see the flush. We did get a lower low, right? We did get that lower low, so that's good. This could be the beginning of that breakout, but we still got to break above the downtrending line. And then we got to start breaking, say, 105 up here. It's over. We go breaking above 105, then we're en route to 150. Any questions? Here, we may get one more flush. Bitcoin's known for this. It'll kind of get lower highs, maybe in a few more times. Then we get a flush. Then we get the big run. But be careful. Do not bet against Bitcoin because that baby will get to 150, 175 range. In my humble opinion, no ifs, no buts, no ands. But you see how it did over here, Randy kept testing it and testing it and testing it. Finally got the flush. Then it was bang, boom, bada bing. It took off like a rocket. So could we get this flush one more time? I'd love to see it. So I can then buy some ETFs. We talked about when we look at Bitcoin was BitU and BitX leveraged. So I would love to see this come down to 40 or lower. Then I'm going to buy some and hold it till we start getting to the 80s or even 100. I'm going to look for this thing to go blasting off when Bitcoin starts. So if I buy down here, if we get that flush I'm looking for, and we're down at $40 or lower, then when do I look to sell? When Bitcoin is propped up and sitting at 150 to 175, wherever this is, I think it's definitely going to be in the 70s, 80s, if not more, by the time Bitcoin gets there. But when it does, I'll buy some down here and sell when Bitcoin gets to 150 or higher. And whether we're in this section or that section, we could maybe even triple our investment if we're up here. Got it? So I don't want to buy just yet because I'm not convinced this is the low. I'd love to see one more flush. You can see I got an alert, that dotted line's an alert to tell me ding, 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 BTIU is below 40 or at around 40. So that would be a time I can buy some. And just buy shares. You don't have to worry about expiration. But if you do any of these, I kind of hesitate to do options on leveraged products like this. Ultra means leverage or 2X means leveraged. I typically don't do options on leverage. That's like dousing yourself in gas and playing with matches. But here is the BITX, the 2X leverage, depending on either one. I like both. So if we can get to 43 or lower, man, I'm going to look to buy some of these. Same principle. We start targeting 70, 80, probably even go up to 120. But it's not about where do I take profits when BitX or BitU hit something. It's when Bitcoin hits that 150, 175 range. Then wherever this guy is sitting, that's when I cash in. Everybody good? So again, no buy, sell to hold because I can't tell you what to do. But I'm looking if we can get that last flush. Maybe we get the CPI flush tomorrow into the inauguration. We start flushing down. But if BitX can get to 43 or lower, BitU can get to, was it 50 or lower? 40 or lower. So basically, either one in the mid to low 40s or lower, that's a great opportunity to buy and shoot for the moon. And again, whenever you buy down here, when do you sell? Don't do a thing until Bitcoin hits 150, 175. Then you can take profits on these. And whether that happens in a month, 2 months, or it pushes on through May, June, July, even late fall, when it finally gets there, that's when I'll take the profits. Amen? All right. So let's drill down on Bitcoin. Is this the end? Well, we could easily do it again. You know, we reached this level, we flushed, we hit, we flushed, we did get a new low. Maybe we do it one more time, get that flush, come down to the 80s or maybe even 75 range. I'd love to see that. Why? Because after the flush, I can get in on those BITX and BITU at that 43 to 40-ish or lower and set the tone for the big run when Mr. Bitcoin runs toward our 150, 175 target, 174 and change. And remember, Bitcoin has always, every halving in history, we've at least reached the 1618 level. Every one in history, there's four of them. Well, this is the fourth one, but everyone has reached at least the 1618 extension. So this is why I'm so confident we're going to go up to that 150, 175 target. Amen? So Harold, if you're in any of these and you're buying, hold it till Bitcoin gets up here and then sell, 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 sell. Take all those profits, stick it in a position. So then after the next crypto halving, or as we move toward the crypto winter, before the next halving in 2028, I guess I got to go to a weekly to show it. But the next halving is going to occur in 2028. So I anticipate we're going to get that big rip as we go into mid-year to maybe third quarter-ish, September, October. We get up here, then we do the big crypto winter going from maybe late 25, early 26, coming down toward late 26, maybe sometime 27. We bottom, then we start bouncing into the next crypto halving and setting up the next rinse and repeat where we'll have new targets in the 300 plus thousand and then some. How do we know where it's going to be? We're going to use whatever the high is, 150, 175, 200, whatever this year's high is, to wherever the next low is in the next few years. We get the low, then we run extension from the high to the low, and we look for the next 1618 to the upside. So what would something like that look like? Well, let me zoom in. Not that, that's not my zoom over here. Let me zoom in and kind of give you some idea. I'll take a lot of these off because I have a million of them on here. And give some idea what we're looking at. Man, we got a bunch. Well, this is what you do when you're doing analyzing for many years and doing this. But let's say, Harold, we go up here to 175. Then we come down to about 60. So we're in that area. This is theoretical right now. Not so much the 175 target. I think we're definitely going to get to 150, 175, that area, but the low, let's come somewhere around the previous breakout area, consolidation zone. So maybe we come down about 60. We're close to 60. Close enough. So if that ends up being the high for the crypto bull run and next crypto winter low, then we're talking about 353. Mr. Tucson, how about that? So is this going to play out? Man, I'm feeling very confident we're going to get up here. The only question is where's the low going to come in? But let's just say we get to the 175, we come down to 60, somewhere around that area. Then that would set up after 2028, going into 2029, et cetera, 12 to 18 months post 2028. That puts us into 2029 or right at the end of 29, early 30, 350. Wow. How awesome is that? From 60 to 350? I'm liking it. I am liking it, but I'm still liking this. So in closing on Bitcoin, back to the daily. Let's just see how that plays out. I'll kind of leave that on the chart if it's not too obnoxious in the way. But based on this, we still have that downtrending highs recently. No, I don't want that. I want my trending line. So we have trending line. And if we start breaking above and starting to break above that 105 level, then I think it's over. Right? Break above the swing point right around that 105 level, then I think it's over. We're going to go on to 150. If not, and we fizzle, I'd love to see us flush down to the EMA. So around that 80, lower 80s area, maybe even over exaggeration, flush even below it, even better. The deeper it goes, the more I like it because the deeper Bitcoin goes, the lower that BTI, BITU, and BITX are going to go. So we talked about in the low 40s to 40 and lower. Well, if I get BITU and BITX in the 30s, I really get excited to buy when Bitcoin flushes. Then when we get the rip up to that 150, 175, those are going to run toward 80, if not 100, 120. We shall see. Amen. Now, I related this earlier with gold and silver to Bitcoin and Ethereum. Right? Check out Bitcoin. We did go on and break all-time highs and make new highs. We pushed to the 1272, reached that level. And most recently, before we're starting to chop in this zone, we still got a long way to go. But notice how Bitcoin went on to make all-time new highs. This one, all-time new highs. Every halving, we go and make all-time new highs. This one, all-time new highs. Look at Ethereum. It's not participating yet. It's just not. The technical picture still shows way more upside, far as that's concerned, but the technical picture on the smaller time frames is looking like it wants to flush one more time. So do we get up here? Still think we got a ways to go, but they really changed things in this area when they went from proof of stake to proof of work to proof of stake. So they used to have miners and all for Ethereum, and then they said, no, we're going to do the proof of stake now. That kind of messed things up. Is that going to limit the upside? Maybe, maybe not, but we shall see. But one thing it hasn't done like Bitcoin, it broke all-time new highs and Ethereum has not, just like silver has not broken all-time highs where gold clearly has. So is this winding up for a big pop? I'm still leaning that way. Every opportunity, there is risk involved, but the technical picture right now is a little disturbing, although from the recent low to high, we're still holding that battle zone, 618 level, so that part's good. Let me take some of this off. This is probably where we're going to flush down to, is why that's sitting there. Somewhere around the 27, 25 area, 2,700, 2,500 zone. I'd like to see it flush down there, give another shot at getting some ETHU at $4 or lower would be ideal. If I can get that opportunity, I still have my junk bids holding. But other than that, I do think that we're having opportunity for a higher low, higher high. I still think Bitcoin's going to break out. We do have from the higher picture, from the high to the low, we did take out the 618, which says we should go to 53.58, highest percent, likely even push towards 7,000. This is my first target zone up here. And then if we go ballistic, maybe we get to 10,000. But so far, it is not participating, Ian. It's just not having anything to do with it. It tried 3 different times to start breaking out toward all-time high, but we failed right around that 4,000-ish level, and we pulled back. So that part is not too concerning. The big picture is we haven't invalidated anything about the 1, 2 going up in threes, etc. So that part's still okay. But we haven't broken out yet. So this thing could go ballistic in a very short period of time, which is kind of what I'm thinking is going to transpire. But we're probably going to get one more flush. So on the daily chart, zoom in. I want to see some levels hold. But this looks from the prior high to low. This is the extension. This is why I think we're probably going to come toward, we came close to 2,700, that 27-ish, maybe 26, 25 area in this zone would be ideal. Right, Harold? Love to see it flush down here and then bounce. So be careful, we may get one more push. And from the bigger picture, from the low to the current high, that puts us right at that 618, 786 level. So all of this is still bullish, right? We got the low to the high so far, and it's still within our support zone. 27 slash down here about 24.95. That's why I'm saying 27.25. And from the recent high to low, breaking to 618 to the downside, this is some extensions. So this is probably where we're going to flush down to before we bounce and get to start ripping. So I'm watching this closely. If we can get that dip down into this area, Bitcoin gets down and dips toward its EMA, Ethereum comes down and dips toward 27, 25-ish range, then it might be a good time to add a few more to this position and look for the bounce. We didn't do too bad from $4 up to $12 on ETHU. That was good, but I think we can do better. Right? I think I have my ETHU over here. We did what now? From $4 down here up to 12 plus. That's not too shabby. And now we got this little pullback yesterday. Is this over? Or do we need one more flush? So if I do the same measurements like I just did on Ethereum and we get the flush, then we potentially could flush to around $5 to maybe $4 range again. If I see ETHU anywhere in the $5 to $3 range, that's a good add to your position. And just buy these outright. You don't have to worry about buying or using call options. Buy some outright. And then once that reverses and Ethereum does its thing, this thing has the potential to literally launch into the stratosphere. But conservatively, we want to start targeting 23, 2023, followed by 38. And look at the gap after 38, up to 93. Whoa, that's insane. We start taking out 40 bucks, we're probably going to start pushing obviously 50, 60, etc. But this could come into play if Ethereum goes to 10,000. This will come into play. Otherwise, if Ethereum just gets to its target 7,000 or 5 to 7,000, we're going to be in this zone, in my humble opinion. And if we do break and go towards 10 or higher, which is not out of the question, if it does it, then we could be up here in the upper stratosphere. And then this thing could go to zero. Anything, I mean, there is risk. It could go to zero. I don't see it, but it could. Read the prospectus before you invest in any of these. Again, I can't tell you what to do, but I do own some of these. And if we dip again, I'm going to own some more and look for that pop. But from 4 to 12, that was triple your money already when we talked about this. And I do think we can do better than that. This is why we're shooting for 20 to 38 range. Any questions? And if Ethereum breaks the 7,000, starts pushing to 10,000, I think it's going to break this and start pushing towards 70, 80, maybe even up here into the 90 range. Can't wait to see. And we're still up on our overall investment, so I'm not concerned with these dips right now. When I get concerned, when Ethereum's sitting up at 150, 175, and we're still sitting in this area, Houston, we got a problem. Because Ethereum's not participating. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. So circle the wagons. Tomorrow, we do have CPI. And historically, when they rarely put PPI before CPI, the markets have a weird reaction. Something weird goes down. So maybe we get a big sell-off tomorrow. Maybe this comes way out of whack. We shall see. But even with PPI today, what happened? The markets popped. CPI just did it again. PPI. The markets popped on this. Woo, 0%. Look, we're expecting 2 and we're at 0. Inflation is over. Producer prices are coming way down. It'd be dirt cheap. And what do the markets do for us? ES popped, and look at it. Ian's still selling off. So Emil, we do, in case you joined us late, Harold, I'm changing our EMAs to what we call the magic Fibbo line, and I'm filling it into one solid type of line. When it's chopping action, it gets very thin. When you start trending, it starts getting thicker and thicker. As evidence on how dollar yen trade's been on an uptrend, but you get the point. It's the same thing. These are the EMAs, the two together, but I like it as a solid line. So that will be taking place for MetaTrader as well. He's working on that now. When I get the new updates, I'll install it and give you a new install where you'll get some updates with that. And maybe I'll throw a few other things in there. I don't know. We'll see. But you'll start to see this will become a solid line instead of two separate lines. Fair enough? And be careful tomorrow, which we'll go over in the markets, but we might get some knee-jerk reaction on CPI. But the plan is to go down to the EMA on ES. The plan is to go down to the EMAs on NASDAQ. The plan is to break, obviously has already done. We're below it, but start pushing down about 200 or so, 2,000 on the Russell, 200-ish and lower on the IWM. At which point we went through, I'm just reiterating, we went through our FI, FIs, et cetera, and the 50-day one right there that we're likely going to flush down below 10. We get below 10 and we're at those EMAs on the S&P. Then I'm looking to go long. NASDAQ, same type of thing. We get NASDAQ to flush down to 10 and lower. And this area go to 10 and lower. and we're sitting at the EMAs, that's a good time to go long. And the Russell flush down to 10 and lower when we're sitting down here on maybe 202 on IWM or lower. That would be a good time to buy that as well. For post inauguration, we're going to get a run. And I think ES is going to break all-time highs again. I think NASDAQ is going to break all-time highs again. I'm not convinced that the Russell is going to break all-time highs again, but maybe. But we'll give you those targets when we get there. So take care. God bless you. We love and appreciate you. Join us again tomorrow. That's it, and that's all.